Hey, everybody. Welcome to the Investors Corner podcast. The longer that you invest in real estate, the more likely you are to run into something called a 1031 exchange. We love investing in real estate because it's one of the smartest ways to defer taxes. And, you can actually eliminate them via opportunity zones in some cases. You should call us about that if you're in that position. But when talking to a longtime client the other day, he's a smart guy, made me aware of something that I had never heard of called a lazy man's 1031 exchange. A smarter way to defer taxes. So I wanted to talk about it today because it might apply to some of you that are in this situation, this lazy man's 1031 exchange. The name is half joking, but if you've ever done a traditional 1031, you'll understand why people sometimes look for easier alternatives. I spoke to an investor this morning who was so amped up about not paying taxes on the sale of their real estate that I think that they were looking at deals that they normally wouldn't have. I think it's better to pay some taxes and do a deal that you like than not pay taxes and do a deal that you hate, right? So just a little sidebar on that. So quick refresher, a traditional 1031 exchange lets you sell an investment property and defer capital gains taxes by rolling the proceeds into the new sale, right? That's what we're after here. It's into another like-kind property, right? So you don't sell your single-family home that you live in and buy a commercial building. A single-family home that you live in typically doesn't count. But on paper, it sounds great, but in real life, it can be stressful. You got a 45-day identification window where once you sell your property, you've got 45 days to declare to your 1031 accommodator, this is what I'm going to buy, or this is my list of properties I'm considering, and you got to comply with that. Side note, the 45 days is after you close. You can identify properties beforehand, and a lot of investors do. If you're thinking about a 1031 exchange and working with the Peak Group, contact us. We can tell you what we have coming up, and sometimes we can help you with the timing of your sale and jumping into one of the Peak's new construction properties. You also have to comply with that 180-day closing deadline. So you've got to close within 180 days of buying the property. Sometimes that's not totally in your control. So you've got pressure to buy something, even if it's not a great deal. And it's a lot of hands-on management, especially with residential properties. So that's where the lazy man's version comes in. So what do I mean by a lazy man's 1031 exchange? I'm talking about selling an active management-heavy property like a rental house or a small multifamily, rolling those proceeds into a more passive real estate investment while still deferring taxes. Less stress, less day-to-day work, still real estate, still tax deferred. So here's a common scenario that we would see. Someone owns a duplex. They've done well, appreciation, rent, growth, equity, it all built up. But now the property needs maintenance. Tenants are more work than they used to be. Or they just don't want to manage it anymore. They don't want to deal with it anymore. They want out, but they don't want to write a massive check to the IRS. So that's where this lazy man's approach shines. Instead of rushing to buy another rental just to meet a 1031 deadline, you, an investor, you can exchange into professionally managed real estate. At Peak, that usually means multifamily projects, purpose-built residential developments, or other institutional-style real estate opportunities. The key difference is passive ownership. You're still in the real estate, you're still deferring capital gains, but you're not getting calls about toilets, tenants, or turnover. So let's talk about why people like that approach. First, it's simple. You don't have to find, inspect, finance, and manage another property on your own. Second, diversification. Instead of being tied to one house or one tenant, you're often spread out over dozens or even hundreds of units. Third, professional management. It's a big one. You're relying on full-time operators whose entire job is running those assets efficiently. And fourth, it's lifestyle. A lot of investors reach a point where they don't want another job. They want income without the headaches, right? So let's be clear, it's not for everyone. You're giving up direct control. You can't paint the walls or refinance whenever you want. They're in long-term investments. But for many people, it's actually a feature, not a bug. So who is the lazy man's 1031s exchange best for? In our experience, it's ideal for long-time rental owners, busy professionals, investors nearing retirement, or anyone who simply wants to invest without triggering a tax bill. It's really appealing if you're tired of managing residential units, but you still believe real estate is a good wealth building tool. And one important thing to mention, timing still matters. Even with a more passive strategy, 1031 rules still apply. You need proper structuring, a qualified intermediary, and the right setup from day one. That's why planning before you sell is critical. So the big takeaway is a lazy man's exchange isn't about being careless, it's about being intentional. You've already done the hard work, you built that equity, now it's about preserving it, deferring your taxes, and making your life easier. At Peak, we spend a lot of time helping investors make that transition from active ownership to more passive, scalable real estate investments. You'll notice on our website it says your investment, your property, your return. Many of our clients want that direct ownership. They hire us as a manager, but they want that direct ownership to control it. And I think there's a place for that, and most of my investments fit in that category. Sometimes you want something that's just a lot more passive. And so that's when you can contact us about some of the limited partner deals that we may be doing, and we'll see if there's a slot for you in one of those so you can comply with the lazy man's 1031. Thanks for listening. We'll catch you on the next episode.